Hi everyone, today let's start off talking about inflation and the effects on the market. Then we'll talk that Apple news that I mentioned briefly yesterday. Then we'll get into the usual data, as well as the charts, as well as my results for the day and my thoughts going into tomorrow's session. If you like trading stocks and options and making money, definitely like and subscribe. I make videos like this every single day that the markets are open as well as Sundays, so make sure you hit the bell so you don't miss out on any future episodes. Welcome to the Portfolio Bulletin. Let's get started. So what exactly does inflation mean for the S&P 500 and for the market as a whole? You can see when we are in that 2 to 3% range, that is typically when markets do their best. 0 to 2 is a little bit weaker. 3 to 5, which is where we are now, is that 8.5 range. And then above 5%, surprisingly, it is still positive at 2.4%, but that is below the 5%. So you would have to adjust for inflation, which would be negative based on that 5. And that is the worst return. So we're back between 3 and 5%, which is still pretty solid, but we want to see that drift below the 2% on the core values, which does give us those best returns that we're looking for. And really, I think this is interesting because we're expecting some cuts next year. And as we start to see those cuts, if we see inflation start to tick up, that could be quite dangerous. That is what they saw in the 70s. And they had to hike rates extremely far, extremely fast in order to combat inflation. And that was not a great time for markets. And it's definitely something to keep an eye on. And the other thing to mention here is don't forget about bonds. As bonds continue to rally, as interest rates go lower, there is definitely opportunity here. 10-year Treasury bonds. If interest rates rise 1%, those bonds would take a 2% hit. But if interest rates fall to 1%, those bonds rise 12%. So that gives you definitely some opportunity to buy bonds. That's why bonds have been rallying really aggressively in anticipation of some cuts next year. So really, as inflation goes lower, gets into that sweet spot for markets, and we see yields come down a little bit, that is beneficial to bonds. It does seem like a good opportunity for bonds. In my opinion, I have been saying bonds are a better opportunity than equities for a while now. I do think equities are a little bit overvalued, but obviously price action is king and markets continue to go higher. Moving over to Apple just for a moment. I mentioned this yesterday. They have had a ban on their Apple Watches due to a patent infringement issue with Maximo, which is the oxygen sensor in the watch. So potentially they were using their technology. They were forced to stop selling. And you can see that here, property of Maximo, their intellectual property. However, it was put into the Court of Appeals, so there is a temporary pause on that ban. And I do think that's what allowed Apple to rally a little bit yesterday, and I do believe it was up a little bit today. We'll look at it on the charts. And as a result, you can see shares of Maximo were down 4%. And like I said, I believe Apple was up. Moving over to seasonality just for a moment. We are in the Santa Claus rally. That's obviously a typically bullish period. You can see today was expected to be bullish at 66%. Tomorrow, 57%, still pretty high. And really during this whole period, there are pretty high numbers expected to be bullish through this period and the first week of January. Moving over to fear and greed, we are still in extreme greed. Let's go ahead and take a look at it on the calendar. You can see we did top out around 80 on December 26th. We did hit 80 on December 15th as well. So we hit those pretty high numbers. And you can see historically 80 to 83 is where we see the top of markets, which did mark the top in July as well. You can see we got into that 82 range on 1 February. Ended up being a high. So we're right in this range where you do tend to see topping. 25 is kind of your area where you're starting to see extreme fear, where you start to see rallies. So definitely in that zone. We've been talking about this for a while. As a contrarian metric, we're definitely in extreme greed. You can see all the indicators here still in greed. Put call ratio still in greed. Market volatility and safe haven demand are still in neutral. Those don't matter to me as much. And then junk bond demand still in greed here. So everything's still quite greedy in markets. Doesn't mean we can't go higher, but something to pay attention to. Moving over to the data, you can see initial jobless claims were slightly higher. Not much higher, but a little bit. Pending home sales at 0% versus the forecast, which was 1%. That is not great. You can see the previous read was revised up as well from minus 1.5 to minus 1.2. So those kind of offset a little bit, but not all the way. I would like to see those numbers a little bit stronger. 7-year note auction came in below 4%. Previously, it was up around 4.4%, so that's quite good. And then we just got the Fed balance sheet numbers here, down about $10 billion as that M2 money supply continues to contract. Moving over to Max Payne, you can see, we didn't move much. I think we were up a couple of cents on the day. Max Pain did go up $1 to 471. Still looking at these big call walls, 475 and 480. Expecting to see a little bit of weakness tomorrow. I do not expect to close above 475. That would give you about $1.50 of potential downside tomorrow. Total options, 2.4 million. Put call ratio at 2 now. Top of the puts still sitting around 478, 479. And then that first put wall down around 470. I do think a close between 470 and 475 is set for the Friday session. We'll see how that plays out. Definitely something to watch, but these call walls are very strong. Moving over to the charts, starting off with the S&P 500s, you can see we did rally after hours yesterday and then basically went sideways throughout the session. Still slightly bullish on the day, 0.04%, but it was a doji, gapped up, fell right at that 21 EMA. If that breaks here on the hourly chart, got the 55 sitting down at 475.53. I would expect to touch that tomorrow. And I do think we might be seeing a little bit of a head and shoulders here. So you could argue this left shoulder is right in this range. Big sell-off, establish that neckline. We're in that head formation now. If we see this fall back into that range around 468.30 or so at the neckline, we see a slight bounce from there right at this low. See that right shoulder form. That could give you a topping formation. Based on these timelines, this wouldn't culminate until about the middle of January, which does work out with seasonality. That would be after your Santa Claus rally is complete. So something to pay attention to. Obviously, we need to see that second fall here. You would expect people to be buying around that 468 area. Just something I'm looking at as a scenario. Again, very slightly bullish. Momentum still continues to be zero, which was also negative momentum here on the hourly chart. You can see that here. And quite a lot of selling on that closing candle, which was a bearish candle. So a little bit of selling there, a little bit of weakness at the end of the session. Does seem like we've kind of topped out for this head formation, in my opinion. Moving over to the NASDAQ on the 15 and the daily, you can see similar thesis, gapped up pre-market, sideways chop, fell into the open a little bit more. You can see we were actually negative on the day, 0.05%. Sideways chop and then fell. So interesting to see that. It is down a little bit more after hours. I actually didn't notice that it got below my trend line here at the close. Rallied to it and then broke back down from it. We're right at my alert level. I was watching that 1120 area. Obviously my main level here is 410.46 and you have that 200 SMA here on the 15-minute chart. Let's go ahead and look at the hourly. We're below the 21 and 9 EMAs. We're below VWAP on the hourly. That's not great as well. You got the 55 here at 410.64. So again, does kind of look like a head and shoulders, almost looks like a head and shoulders in the short term as well, where you have a left shoulder head looking for a bounce from this area, right shoulder on the hourly charts. And then you have that longer term head and shoulders, just like the SPY that we talked about right here, left shoulder, head, right shoulder potentially to form. And then we start to see a breakdown. That could be possible. Looking at RSI and momentum, again, daily momentum continues to be very low. RSI still overbought, and you can see that momentum on the hourly chart. RSI breaking down does not look great in comparison to what we had been seeing with that RSI below the 50 line on the hourly chart. Moving over to the Russell and the Dow on the 4-hour chart, you can see we did fall throughout the session here today. Did wick all the way down to 203.35, rallied up a little bit from there to 204. In terms of structure, we're just below the 9 EMA here. Let's look at that on the hourly chart, see if we can get any additional information. Below the 9 and 21s here on the 1-hour chart, but did touch that 55, so that's holding here. And that would be your dynamic support. If that starts to break down, then you're looking at the level down here, 201.88. Again, I'm still very bullish on small caps going forward, but this is starting to show a little bit of weakness. You could argue this is a slightly lower low versus the low yesterday. Again, watching that 55 EMA. And then looking at the Dow, this continues to go higher. So the Dow continues to be strong, did rally today, was positive on the day. You can see we broke that 376 level yesterday, held that, tested it today, rallied off that level, so still looks strong. And the Dow was the top performer on the day. Moving over to the equal weights, I haven't talked about this one in a bit, so let's look at it. On the hourly chart, you can see we had a really strong push on Thursday and Friday before selling off on that Friday session. Held flat at my level, 155.79. On Monday, rallied up Tuesday, held Wednesday, until we saw that bigger breakdown to trend. Trend held, saw a rally up into current prices, but we have not broken this high from Friday, which is interesting, and we've definitely topped out in that area. So we have a little bit of short-term resistance. Let's go ahead and establish that here. Short-term resistance at this previous top. If you see a break here, then you're looking for that 160.31 area. Let's go ahead and jump to the daily chart. In terms of daily, you can see we're still well above these peaks from February as well as July. Still looking for a touch of these peaks here from March of 22. Certainly possible, but we have seen weakness. Momentum has faded basically to zero. RSI below the SMA, back into overbought conditions. Clear divergence. We saw a peak for RSI on Thursday the 14th. We have higher prices right now, but much lower RSI read. So definitely fading on this rally, but structure is still intact. Moving over to Apple and Tesla. Like I said, Apple did have a positive day. Gapped up. Almost touched the 9 EMA here on the daily charts. Momentum still bearish. RSI still slightly positive above the 50 line. So bullish slightly. I would love to see it get above that 9 EMA as well as the 21 in VWAP. So technically we're still below all of those shorter term EMAs on the daily chart. Let's look at that on the hourly just for a moment. And you can see we're still holding that hourly 21 EMA. That is your level to watch right now. And we are right at it. You want to see that hold. It's at 193.61. You want to see it get above the level 193.96. Then you can start to trade that a little bit more bullishly off of that level. Still strong selling on the close, strong selling on that last candle, which is not great, but otherwise short-term bullish here on Apple, especially with that catalyst. We'll see how that one plays out. It is just a short-term stop in quartz, but otherwise looking at Tesla, you can see we did touch that level we expected to. We gapped up, touched it just barely, and then sold off massively. So that's not great. And I definitely think this looks a lot weaker. Massive engulfing candle. Took out 2 full days of price action. We're almost back to the lows from Friday the 22nd. You got the 144 EMA sitting down at 247.59, and then my next shorter term level sitting in that 246.50 area, as well as the 21 and VWAP. So I would expect to get into that range over the next couple of days. Hit the price target, sold off immediately. Looking for a little bit more selling tomorrow, in my opinion. Moving over to AMD and Microsoft. These did really well today. AMD continues to be the best performer. 1.84%, super strong. Continues to be a rocket ship. Next level, 151.18. Still the same level from yesterday. I do expect to touch that tomorrow. We'll see how that one plays out. Otherwise, everything's still very bullish on AMD. I wanted to bring up Microsoft. I haven't talked about them in a while. You can see we had this really strong peak, broke down to my support at 367, held that level multiple times, rallied up above the next one, 372. And we've been above that level, consolidating between that level and 378. But this definitely seems to be fading here a little bit. We gapped up today, dojied, momentum basically zero. Let's look at that RSI. Slightly positive on RSI, could accelerate higher. You can see we did just barely get across of the 9 and 21 EMAs on the daily chart, so that's slightly bullish as well. And if we do see a resumption of this rally up to that next level, then maybe we see a little bit more bullishness across markets. Obviously, Microsoft is a massive company and can drive markets if it decides to. Moving over to staples and discretionaries. Staples continues to be the better performer here. Very small gain today, 0.04%. Closed above yesterday's high after gapping down. Momentum bullish, RSI bullish, still looks good. Discretionaries not great, 0.52% down, closed below my 180.10 level after wicking the high from yesterday. Bearish momentum. Looking at RSI, you can see it continues to break down below the SMA. It's out of overbought conditions here. Next short-term support, 178. And then you got the 21 EMA sitting all the way down at 175. You can see VWAP starting to lose its growth as well. As prices start to sell, VWAP will flatten out, momentum bearish, and it does seem like people are moving into safer equities. Moving over to oil and gas and energy, these did not look great today, so they continued to fall, which is not what I wanted. Looking at this highly traded zone on oil and gas at 137.36, got the 55 EMA sitting down at 136 as well. And then you got the 135 level that I continue to watch. I really need this zone to hold. While I'm not trading oil and gas directly, obviously the energy sector is going to be affected by its movements. And similarly here with energy, I want to see this hold this 144 and 55 EMA area. We're right there at it now at $84. I do have a level at 83.55. That is the level that I'm using as a stop right now. And I'll show you that on my accounts. That's what I'm really watching. That's where I'm looking for this to hold. I need it to do it right there. You can hold right here, that would be fine, but really that 83.55 level I think is very important. If that breaks, then you're looking for a move back into this 80.50 area at these previous lows from December. So energy doji at an important area. I do think there's a potential that it could hold right here. And if it doesn't, be very tight with those stops. Moving over to yields, we did see these pop just a little bit. You can see it was big down day yesterday, got below my level, held that close, rallied up a little bit just above my 2.25 area. And then looking at the 10-year yield, you can see slight bullish day as well, still well below the 9 EMAs, momentum basically zero here. And I do think yields are going to turn around at least a little bit at some point. This has been a really strong drop from 5% all the way well below 4%. So big move on yields. And like I said, I think markets are overshooting a little bit. And we'll probably see this pop back up into the 4 to 4.25 range at some point. Obviously, the question is when. Moving over to breadth, you can see we did get positive breadth on the day, which is interesting. You can see that here on the 20-day average, 2.9%, almost back up to that 86.50 level. So that's slightly bullish, even with the weakness that we saw in markets. However, still watching this 50-day average continues to be flat on the week. We're still in that critical level. Talk about it every time we're in a critical level. This kind of mirrors fear and greed. We're definitely in that greed area. And then let's look at that on the daily chart. You can see we have been just grinding in this area. Bearish momentum with slightly bullish price action, RSI breaking down. So weakness is coming through. We just haven't seen any kind of follow through yet. Moving over to the dollar on the hourly and the weekly. We talked about this yesterday, touching that 144 EMA on the weekly chart. Sure enough, we got right to that level. Touched it, bounced off that level quite strongly. You can see here, bounced really strong, came back, tested the 21 EMA, overshot it quite a lot actually. Ended up getting back above it, rallied right to my next level at 101.25. And that's where we're sitting right now. Look at that on the daily chart. You can see gap down, touched that level, rallied up to my 101.25 area. Now you can see RSI bouncing off of oversold conditions. It's going to hold. Obviously, this is still very bearish in terms of structure, but this is a nice reversal on the hourly chart. Very powerful, definitely something to watch. And if we start to see a little bit of dollar strength, that could be weaker for equities. And that might be why we're seeing equities kind of sell off here at the end of the session, as we see a pretty substantial bounce on the dollar. Moving over to bonds, JNK sold off, engulfed the previous candle. Still holding above 94.82. Momentum, basically zero. RSI crossing below the SMA. So you could start to see this kind of sell off a little bit. Again, still has that head and shoulders type structure. JNK typically moves with equities, and this does look quite weak, a little bit weaker than what we saw on equities. Could be a little bit of foreshadowing there. And then looking at TLT, could not hold above that 100 level, closed below it 99.78. Now we're a little bit lower at 99.75 after hours. Momentum, basically zero. RSI moving lower. And like I said, I think yields might have bottomed out here a little bit in the short term, or they've at least gone a little bit too far and need to bounce. Markets are a little too optimistic in my opinion. Moving over to the VIX, not much to report here, except that momentum is rolling back towards bullish. That's interesting. Maybe we need to adjust this, put it right here. You can see we're still below it, kind of touched it a little bit, still consolidating in this 12.5 range, which is the lows here from this previous consolidation. Go ahead and add a short-term level in that area. If it breaks below it, probably more bullishness to come, but momentum ticking towards bullish on the 4-hour chart. Something to watch here going into tomorrow's session on the VIX. Moving over to my accounts, I did fine on the day, up about $250. IWM still doing nothing with this position. Covered almost all of my losses with these covered calls, and I am protected all the way down to 189. So lots and lots of protection on this position, and I can always roll in and down if I need to, if we see more significant weakness. And then looking at the Qs, I still have these same positions, continuing to play these 1 day to expiration puts. I made money on the ones that I had today, but for tomorrow I did go down 1 strike, and then on these calls, continuing to leave those alone. Again, we got the weekly options that come up tomorrow. We'll see if I do anything with those. Probably not likely with what we're seeing across markets. And then my XLE position, you can see I did roll that out a week and down half a point to 84.50 for almost $1 credit. So looking to buy the stock down at 83.50, which was the stop loss that I mentioned on the charts. So overall, still very protected to the downside, but still trying to make a little bit of money if we see markets rally. And just to give you a better picture of what that looks like, you can see it here. If we close between basically 404 and 411, that does give me that max profit of around $4,000 over the next 50 days. If we rally too aggressively, I'll start to lose money, but I could convert this put into some shares, so that would protect me to the upside if I have to. And if this starts to fall, I can take off this put, and then I'll have the 4 calls to protect my shares. I could also stop out of those shares and then put some longer dated puts on in order to reestablish that position. That's basically the 2 ways that I adjust what I have on right now in this current position. Let me know down in the comment section what you think of inflation and its effects on the equity markets and the S&P 500. Will we get into that sweet spot, or will we see inflation go higher once we start to see cuts from the Fed? Definitely like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.